The stock market just dipped, and a lot of people have had a lot of different things to say about it. So I'm going to be the voice of reason, seeing as some people are crazy, and in honesty I'm quite disappointed with some of the content on the subject so far, and try my best to explain why it dipped, if it will continue to dip, and what you should be doing if you're worried as an investor. And all I ask is that you caress that like button and wink at the subscribe button. Otherwise, let's get into it. I'll save you the hassle of watching the rest of the video right now and say, yes, we are in a huge bubble right now when it comes to a lot of sectors. In my Discord, me and a few other members have had a really good chat about this literally the night of the dip, and it really put into perspective something we'd all known for quite a while but not really spoken about in a public setting. And it's how retail investors are a little more important to a stock than they used to be.
Are you sure about that?
We are living in a golden age where TikTok, YouTube and Twitter are getting a lot of new investors involved in the markets, and with it comes a whole lot more money influx and a whole lot more influence on the market.
YOLO!
A visual representation of this is the graph here. As you can see, the comparison between the S&P 500 investments and investments into legitimately non-profitable technology companies, just as an example because there are much bigger and broader bubbles, is outstanding to see visually. Of course, this could be a little misleading, so let's compare this to the amount of investing in the Nasdaq as a whole compared to the Nasdaq non-profitable stocks. We still see a huge disparity between the two. Of course, with more investors comes more money to pump into the market.
YOLO!
But then with the mass of retail investors comes much more volatility when things start to go up or down. And I think that is what we saw yesterday, and have been seeing in stocks like Bingo, which shot up thousands of %. As a whole, retail investors are now amplifying extremes, and in my own opinion, what makes sense most is that with large dips, most retail investors aren't quite as diamond hands as they'd like to think. So some of the volatility they've added in recent months is likely to die down over the coming month or two as they take their investments out. Now, although a lot of volatility comes from retail investors as of recent, there have been other gears turning that have contributed to the price action we have been seeing, this coming from government and institutional sides. Now, I've been umming and ahhing about including this point, so if you'd like, you can happily skip this with the time above, but I think I'd be biased if I didn't mention, in short, what happened with the whole debacle involving Wall Street Bets and GME. Essentially, the retail investors showed that when they band together, they can disrupt the market and make some people some money. But this isn't new. It was essentially just a boycott of institutions, which involved retail investors pumping a stock that would hurt institutions because they shorted it. Shorting essentially being the process of an institution shunting stock growth for personal gain. Yes, very frustrating for genuine investors. However, although I think shorting is incredibly unethical in multiple ways, the way this happened was incredibly disruptive to the market. And personally, I think for the worse. Yes, the message got put across, but in the process what happened was a select few people made a lot of money from the movement, but the vast majority of the people who were keeping the pump going were burnt to the ground when the stock started to crash. Add to this the lack of experience of a lot of those investors, and you have a recipe for hurting a lot more people than the message was trying to help. Now, how does this tie into the recent events? Well, the government have now started talking about increasing capital gains tax. And something even worse that genuinely a couple of my American investors in the Discord had to convince me wasn't a joke, there is actual talk about taxing unrealized capital gains. Now, just to keep this short and sweet, more capital gains equals more uncertainty into how investors map the market and what their trading strategy will be for navigating taxes. The unrealized capital gains has caused a huge stir in investors, which has already seen talk about people investing in foreign exchanges as it would offer a more lucrative investing strategy. So what have we learned from this? Well, there's a hell of a lot of uncertainty in the market about regulations, and this leads to something I like to call bubbles on needles. In the Discord, I'm well known for my weird and wacky phrases, but this one is a joke with substance. You can slap a bubble on a needle and it won't pop, but if that needle moves the wrong way, the bubble will be put under more tension and ultimately pop. I believe what we're experiencing at the moment with the market is that we have a huge amount of bubbles in emerging and interesting sectors, but as soon as things start to go south, we see huge downtrends. And a big part of this is due to the companies that are being invested in. I think this recent dip has been a huge wake-up call for people allocating large portions of their portfolio into speculative investments. Things like penny stocks, companies that don't make any profit, or even just companies with an idea. Speculative stocks are incredibly lucrative if you research them and look into the right ones with the right fundamentals and products. However, only a tiny portion of your portfolio should be allocated into these. I won't name stocks as I don't want to shame any holders who may be watching, but some notable sectors that are vastly outpriced due to FOMO and hype include EV stocks, biotech stocks, and pharmaceuticals. And they were all massacred yesterday, way beyond almost any other sectors that also took a dip but rebounded and showed strength within the dip. So myself and many people in my Discord are simply chatting day to day about what is happening in the market. I'm just going to pause the video here because as we've spoken about GME, what is happening literally right now on the 24th of February, GME is doing a repeat, especially after a dip like that. That's not healthy. I just wanted to chime in and say, what the heck? I'm recording a video and it's happening again. So back to the regular video. Simply because talking and conversing with like-minded people is possibly the best way to make sense of what, in all honesty, is a very confusing time in the markets. A huge thing that seems not to be spoken about is the lack of research people are putting into stocks. Research provides the insight into why you are invested in a company, the risks that are involved, the goals you have for that company's SP, and a whole lot more. Weak hands derive, in my opinion, from lack of knowledge on what you own.
I would appreciate it if you didn't tell anybody about my busy hands.
And if not, from lack of knowledge on events that can transpire. I research every stock I own so that I know the challenges it faces, the product it creates, its competition, and its potential. In knowing this, when dips happen, I know that my fundamentals haven't changed, and in essence, the stock goes on sale. A perfect example of this is a member in my Discord picked up shares in Orbital Energy when it dipped to around $5. We know in the Discord that Orbital Energy, even post-dip, was undervalued. So our member took the opportunity to buy shares in a stock whilst it was on sale and saw profits literally the same day when it rebounded. This is that theory in practice. Know what you own, why you own it, and when to sell it, and feel comfortable through volatility. Another thing that I'll put emphasis on is the importance of free-flowing cash. I have been dedicated to building the amount of free-flowing cash I have simply because I know the volatility of the market will cause dips in the companies I've researched. When those dips happen, I use that free-flowing cash to average down or lucratively up on those investments. The amount of portfolios with little to no free-flowing cash, as demonstrated by the recent dip, is alarming. So if you take anything from this video, please take away the idea of building at least 10 to 20% of your portfolio into spare cash that you can work with. Okay, try this one on for size. Diversify that portfolio. If you lost 20, 30, 40, maybe even 50% of your portfolio value in the recent dip, This is a wake-up call to diversify that portfolio. Diversify into less volatility-struck assets. For crying out loud, if you've never looked into an ETF, a sector that is reliably strong, or defensive stocks, this is the time to do so. These funds, stocks, and sectors save you that gut-wrenching feeling of seeing red after a lot of green, because they are more reliable than most growth stocks. So just branch out a little. Well, I'm teaching around 500 people in our Discord how to invest in real time. I'm not biased at all in saying that I think our Discord is the best source for learning how to invest out there. Through this whole debacle in the markets, we have been a constant source of support and information for our investors and traders who may be new or wanting to understand the market action going on. Through our company reports, educational content, and vast array of knowledge, we have been helping people for the last 2 months on the values of investing for free. We don't boast any silly figures, we don't ram trading down your gullet, and we don't try to coerce you into strange investments with ludicrous price targets that will never happen. We supply you information, knowledge, and condensed experience to help you along your travels into becoming an incredible investor. We have information on stocks, bonds, trading, housing, commodities, chicken, fashion, and more. So if a community like that seems appealing to you, join us. We'd love to have you and converse with you. Once again, I'd like to thank you guys for watching. We are growing really, really nicely. And along with our Discord, you guys are incredible for conversing with about current markets. I aim to be a little bit different from other stock YouTubers, mostly because I like speaking my mind, and sometimes that can be seen negatively. But I think what I say is valuable nonetheless. But anyways, if you wouldn't mind caressing that like button and winking at the subscribe button, that would be incredible. But for now, this is DD-Bae signing off.